My name is Robert, your Tampa Realtor. I'm here with Natalie today. She is one of our preferred lenders, and she is going to help answer some questions that a lot of you commonly have when it comes to buying a home or when thinking about financing a home. So,
Well, thank you, Robert. Thank you very much. It's a cold day here in Tampa for sure.
It's freezing at 60 degrees, is it?
Yes, it is freezing.
Yeah, it's a freezing day.
But like Robert and me were talking, and I said, "Oh, this is an awesome topic to go over in a video," because he was telling me all the stories about the buyers that I've been asking him questions. So, Robert, go ahead with your first question. Hit me.
Well, the first thing people want to know is, what do they need to qualify when buying their first home or buying a home in general?
So it's very easy. A lot of people, if you're not buying cash, which if you're buying cash, you can adopt me. But if you're not buying cash and you don't need financing, there's one specific process that you need to do. Besides talking to a real estate agent, they're probably gonna guide you and say, okay, you know what you're looking for, what type of home, and how are you gonna finance the property, right? That's the couple questions that the real estate agent's gonna ask, right? Are you gonna finance it? Are you gonna buy it
How are you gonna
cash?
pay for it?
So that's when the mortgage lender comes in. They'll refer you to a lender or ask you if you've already been pre-approved. Because what we're going to do is we're going to go through a quick questionnaire. We're going to look at your income, your assets, and we're going to look at your credit. Yes, we're going to evaluate completely. I always tell everybody, don't disqualify yourself because you hear thousands of different things and stories. Everybody has a different DNA when it comes to their loan. Not because you work at the same company, you make the same hours, you qualify for the same thing. It doesn't work that way. Everybody has a different process. Everybody has a different score. Everybody has, different family members, income that they receive that maybe the other person doesn't. So the process is very simple. You get in contact with us. We can do what is called a loan application. We'll do a run of your credit. We'll look at your credit history. We're not only look at the scores, we're going to look at everything as a whole. We're also going to look at your income and we're going to look at your assets to close. And once we can figure out that you are ready to go, we'll let Robert know, hey, they're pre-approved. Go on shopping.
And then we'll start looking at houses. One of the first questions commonly get is, wouldn't looking at my credit lower my score?
So yes, that's the biggest thing. Don't run my credit because I don't want my score to get hit. So technically what the rule is that if you're out shopping for a mortgage, you have 30 days to shop around, which means you can go to different mortgage lenders, and some lenders will lie and say, oh, don't do it because your scores will go down. They just don't want you to shop around. But you have 30 days and it should not affect your scores. With us specifically, we do a soft pull on your credit, which doesn't affect your score, but we can see the whole history of your credit report without actually doing a hard inquiry on it. So, the whole myth of don't run your credit, we need to see your credit because, like I said, we don't only look at scores, we look at your liabilities, we look at your monthly payments, we look at collections. Some people don't even know they have collections because something might have popped in their credit report. So it's always good to look at their credit reports.
And we have resources to help with credit repair and to help improve the score. That's something that's very fixable. Just need to have some intent and some time for it to work itself out, but it can be done. So that's something that I work with and you definitely work with, helping people's credit score. So that's the credit score. And the other aspect is the down payment. People want to know how much money do they need in the bank or to have to buy a home. That is one of the most important questions.
And actually, it's funny because you had mentioned earlier we were talking and said, well, before I even got into the business, I thought I needed 20% down to buy a house. And it's a common misconception that you need 20% down, especially if you're buying for the first time. FHA, you can go with 3.5% down. On conventional, you can use Home Ready, Home Possible and do 3% down. So you don't need 20% down to buy. And obviously, with this whole thing comes a down payment assistance. Some of them are grants, some of them are they'll give you the money to buy the house, and you have to live in the property for a certain amount of time. And some of them are not grants. They're just a second mortgage. They're silent second mortgage with no interest. And the government kind of gives you that incentive so that you can afford to buy a home right away, but you have to give that money back. So, but there's ways to get into a home if you don't really have a lot of savings in the bank.
And for those grants, those are only available to first-time homebuyers?
Yes, so they're only available for first-time home buyers. So if you're not a first-time home buyer, and the correct definition of being a first-time home buyer is not being on title on the last 3 years. And I always like to make that, because some people say, "Oh well, I bought a house and I sold it 10 years ago." If you're not entitled on any property and you haven't used never a down payment assistance, you have never used it, you will qualify as a first-time home buyer. But let's say your grandma passed you an inheritance and now you have a property that's on your name, automatically disqualifies you as a first-time home buyer because you're entitled, even if you didn't buy the property yourself.
Okay. And so that's to pre-qualify.
Mhm.
There's probably a lot more questions that we could spend hours talking about.
Yeah,
But
that's a topic for another video.
It's another video, or maybe a live. We'll see.
Oh, that's right.
But let's say we get pre-qualified and we find a property we like. What are some of the things to consider on the property regarding the payment and just overall that could affect being able to buy that specific house that we fell in love with? And what's the payments going to be like? Like, at what point do we see estimates or know how much we'll be spending?
So normally when you're getting pre-approved, the mortgage broker, right? Not all of them, but most of them are gonna go over what your payment is gonna look like. And what Robert is mentioning here is that your payment is not only principal and interest. Your payment has several things on it. Your payment is gonna include your taxes. You're here in the United States, you have to pay taxes on your property, even if it's paid outright. You're always gonna pay taxes, so that's gonna be a variable depending on county, depending on where you're buying. Some taxes are higher, some taxes are lower. And hazard insurance. So if you have a property and you're financing it, it's mandatory to have hazard insurance, which is, let's say the roof has damage, the hurricane, a water pipe broke, you have leakage. That's when the house insurance is gonna come in. Also, additional things that some properties might have is flood insurance.
Flood insurance.
So if the house is in a flood zone, you have to have flood insurance. Some additional properties have what they call CDDs. So additional to the tax, they have CDDs, which also have to be accounted in that payment. We take into consideration homeowners associations as well. So if the property is in a homeowners association and pays a monthly, that's also going to be included on that debt to income with all your payments. So when you see that full payment, sometimes it's like, oh wow, that's a big payment, but it's including a lot of
annual
taxes.
taxes,
Yeah,
the annual insurance, and I have HOA
that's correct.
on top of the principal, which is the payments towards your house, and then
Principal
the
and
interest.
Exactly. So that it comes all in concept, and obviously every property is going to have a difference in payment because of taxes, of insurance.
It's going to vary by property.
It's going to vary by property, definitely.
Thank you.
You're welcome.
If you guys have any more questions, I'm here to help. Natalie's here to help. I'll share her information as well. And talk to you soon.